Okay, recording this video. It's well after close of trade, Wednesday, 14th of March 2012, and I got a great little question by email from Charinder talking about the video that I put up for today's trade. And let me just pull up the image that screen grab that Charinder took of the video, and we're referencing this exhaustion selling signal on better momentum on the 500 tip bar chart here. And the question is to do with barrier indicators indicated this exhaustion selling signal is people just getting on board. In the email he actually goes on and says how would one determine if the exhaustion selling is people getting on board or if it's true exhaustion selling signal. So let's just talk about that, because it goes back for me this kind of rule of three, if you like, and it comes up a lot in terms of the analysis that I do and the way I think about kind of trends developing. So let's just have a quick recap on what happened during this Wednesday. So 4,500 tip bar chart. Overnight, yesterday we had an extremely strong up day. We kind of finished up in the 90s with exhaustion buying, bearish divergence kind of came in. And then first thing that we had during the first hour of the day was a pullback to end of trend signal after exhaustion buying, bearish divergence, and that marked the top of the day. We had blue professional bars right at the top, and we had a nice end of trend signal there, and we sold off from there. Now, this move kind of down was punctuated by a pretty strong rally. It was a really quick kind of 4 points all the way up. Blue professional bars come into here, a flush signal here. This is flushing out the last of the buyers at that point, and then we kind of go down into a downtrend. We end this downtrend with pullback to end of trend, exhaustion selling, bullish divergence kind of comes in, another little, that's the first divergence signal, another divergence signal kind of comes in here, if you like, almost on this kind of double bottom. That was the end of the move. Now, it was only a 10-point range top to bottom, but you know, the indicators showed it beautifully in terms of top and bottom here with the end of trend signals and so on. But what was going on when you look at this kind of trend going through, and for me trends kind of break into three waves either moving up or moving down, and Elliott wave is not unlike this kind of we talk about Elliott waves kind of moving up in 5 stages. So you get kind of a first stage, a contraction stage, the third stage of an Elliott wave move is the strongest up move, another kind of contraction move, counter trend move, and then the final kind of blow off move. So Elliott talks about 5 waves, but effectively a move is happening in 3 major waves, first, second and third wave. Whether you look at kind of up and down moves, I mean, I know Elliott kind of counts down moves differently than up moves, but essentially you're talking about 3 types of people that are moving early, then there's the vast majority, and then people moving late, the laggards. And it always reminds me of a very important book by Geoffrey Moore called Crossing the Chasm. Came out in the early 90s, just talking about the way new technology was adopted by the general population, and it kind of came in. I think he broke up the type of adopters into 5 different segments, but effectively, there's the early adopters, the majority, the strongest kind of move, and then there are the laggards. And if you think of, let's say banks and ATMs, the first people that were game enough to stop using checkbooks or going into banks and withdrawing money, and they used the ATMs outside of the bank, and then the mass market comes along, everybody moves along, and then the last people, like my mother, to use an ATM are the laggards. The market kind of moves in these 3 kind of stages, and trends move the same way. There are people that are early into a trade, then there's, as the trade develops, everybody realizes that it's going in a particular direction, the whole of the market kind of moves on, and then there's the laggards, the people that are late. You can look at it in terms of gold, the people that are buying gold at whatever the bottom was in gold, $600-700, and the people that were kind of buying gold up at almost $2,000 in the last year. And then let's say Apple, who were the people buying Apple in 2003 versus the people that are buying Apple today at $560 odd. There's a difference between early adopters and late adopters, and for me those waves kind of break down in 3. And the market today was effectively 3 kind of moves. This first kind of move here, small little move that got this going, people that are early adopters. We had a little bit of retracement, then we had this second strong wave. We had a strong bounce from there after that second wave, kind of confused a lot of people, and then finally this kind of last wave that kind of moves down. And when you go to the 500 tip bar chart, let's look at what better momentum was showing during that day. So here's, I've kind of compressed all of these bars, taken off as much as possible, and just really showing better momentum here on the price bars and below the price bars. Here's the open of the day, and we had that rally into that end of trend signal on the 4500 tip bar chart, and here's the end of the day where we bottomed out after the end of trend on the way down. So, and if you look at the exhaustion selling signals, and I've just marked the first kind of bullish divergence signals after those exhaustion selling signals, for me this is how these first kind of three waves broke down, and better momentum showing you that this first selling that goes on here, we get an extreme amount of selling going on, and we rally from there. And you can see what better momentum did. Better momentum showed you there was an exhaustion, an extreme kind of selling signal, and a bullish divergence signal kind of came in, and we just did a little bit of rally from there. We ran out of steam and came into a bearish divergence signal, and this is the second move down. You can see we get a stronger move down in terms of selling activity. Bullish divergence kind of comes in, and the market, yeah, we travel down a little bit further, but essentially we hold. We had this fairly strong, and this is a little bit unusual, today's activity, and I think that kind of freaked people out. We have this fairly strong move, counter trend move. Usually they're not as strong as that in terms of trend moves, but we did have that, you know, kind of punctuating between this majority move down and to this final leg that kind of comes in, and there comes exhaustion selling again, bullish divergence kind of come in, and we travel a little bit further while we're making those bullish divergence pattern. Eventually we kind of bottom out here in the 85, 86 kind of area down here. But for me, what's happening here is an extreme selling, first leg down, then the second leg down, and then the third leg down. So, you know, these are the innovators, the people that are getting on the move early. This is the vast majority kind of selling down, getting onto this move here. So that's the vast majority. And then the laggards that are kind of taking us into this move. These are the people kind of selling right at the end of the move, kind of as the trend is kind of ending, if you like. And so when I'm referencing an exhaustion selling signal on the 500 tip bar chart, when it's the first one in a sequence, and you can tell from price, you know, price had only just topped out, and we had this first kind of move down. We hadn't made new lows for the day. We'd maybe just broken below or touched, you know, a previous kind of pivot type level at this point here, and we've made a slightly kind of lower low at this point, but we hadn't broken into a new downtrend. So for me, that's not, it's exhausting. The first innovators, if you like, the first people selling down this move are exhausted at that point, and that's why we get this small rally back. But that's the first wave of selling into this move. Then we get the second wave, and then we get the last wave kind of down here. So that's why I'm talking about this being not exhaustion selling. This is extreme selling that is kicking off the move. And you need to relate it to where you are in terms of price. You know that this is quite a lot of selling at this point, but it's just getting this trend kind of going, because you know we'd run pretty hard during the day, during yesterday. We topped out with end of trend, bearish divergence come in. You know, it was a high likelihood that we were going to get a reversal of trend here. This is kind of a classic exhaustion buying, bearish divergence. Wait. You know, that's the signal that we've run out of puff. Wait till we get price exhaustion as well. Bang, exhaustion move here. We should be really waiting for second cyclical turn at this particular one. That exhaustion selling signal in this kind of terminology should have happened more at kind of the left shoulder than here. So, and this is overnight session stuff going on with Rambo amateur bars. So there's all kinds of it's easy to move the market around through these points with kind of low activity here, but you know, there was a high likelihood at the beginning of today that we were going to get some kind of profit taking and some kind of sell-off. Not necessarily a strong change in trend after yesterday's strong move up. It's not just going to reverse and go straight down the other way. You know, that's low probability kind of outcome. And this is just showing these three kind of waves of selling down. Now, I have to say, you know, on my 500 tip bar charts, where I kind of I use a little setup here where I've set up everything kind of horizontally. I've got the 500, the 1500, and the 4500 tip bar chart, you know, side by side. This looks horrible on this particular video because it's all kind of compressed, but you know, on a big screen, there's plenty of room here. And the way I set these up is that they're side by side, so the bar spacing is 3 times each previous chart, so that I can see all these signals happening together. And what I see time and time again is on the 500 tip bar chart, this kind of sequence, if you like, of exhaustion selling, bullish divergence, and flush patterns. That kind of cycle, that whole cycle of bottoming out or little kind of trend moves happening on the 500 chart. I'll see that 3 times before a market kind of switches around on the 500 tip bar chart. So it's just a a rule of thumb, if you like, that on the lowest time frame tip bar chart, seeing three kind of these types of sequences where you get exhaustion, bullish divergence, and maybe flush patterns kind of coming in to end a move. And for me, it just comes down to this kind of rule of three, where markets move in three kind of waves, and it's behavior. It's kind of human behavior. There are early adopters. There's the vast majority. And then there are the laggards that kind of come in late in the piece. So there we go. That's the reason why I would interpret that on the 500 tip bar chart. The first exhaustion selling signal is just getting the move going, and we'll have a little bit of retracement from there. This, was the low risk entry point to get in on this trade. When we looked at this on the other time frames, 1500. So for example here, it was beautiful. It was like amateur up bars into this point, exhaustion buying. We'd run out of kind of exhaustion buying at this point, amateur up bars, bang, and that was the lowest risk entry point. I was short at like 92 or something like that during the early part of that move, a little bit too early, but this was the best kind of low risk entry point to get in. But there we go. So I hope that helps, Shrindra, in terms of understanding the way I'm looking at my signals, and just look for those kind of waves of three in terms of these exhaustion patterns on the lowest time frame.